Hello, I'm Charlie Dawson, NAR Financial Services Policy Representative, and today I'm here with the Vice President of Regulatory and Industry Relations, Joe Ventrone, to discuss a recent victory on the housing finance front and our efforts to ensure that home loans remain affordable and available to qualified borrowers. On August 28th, the 6 financial regulators responsible for writing and implementing the Qualified Residential Mortgage Rule, or QRM, reproposed the rule after receiving pushback on their previous proposal, which required borrowers to have a 20% down payment on the purchase of their home in order to qualify for the most preferred and affordable mortgage products. The new rule aligns the QRM definition with the Qualified Mortgage, or QM, definition. The QM rule requires lenders to verify that borrowers have the ability to repay their loans. This is by ensuring a borrower's income is documented. It excludes risky loan products such as negative amortizing loans, and also keeps a borrower's total monthly debt payment at a reasonable level. Joe, as I mentioned, the initial proposal received considerable pushback from NAR, other industry groups, consumer groups, and lawmakers. Can you talk about NAR's efforts as well as the Coalition for Sensible Housing Policy?
Sure. Thank you, Charlie. Once this regulation was issued 2.5 years ago, we actually knew about it ahead of time, and we started meeting with our industry partners. And once the regulation was actually issued, it got a little bit more serious. We got more formalized. We started meeting weekly, etc. The coalition grew and grew. It started at around 11. We ended at 50 groups. Typically in Washington, D.C., when you have a housing issue, it's usually the mortgage bankers, the American bankers, home builders, and the realtors, the big 3, the big 4. This issue brought consumer groups, civil rights groups, community groups, Center for Responsible Lending, Consumer Federation of America, the Urban League, to name a few. So those were the groups that helped with our advocacy efforts. The Secretary of HUD, in speeches, also acknowledged the work of the Coalition for Sensible Housing as a facilitator that got the 6 financial regulators to see our point of view.
And from that, I mean, the coalition and NAR staff, we are fully committed to those advocacy efforts. I mean, we regularly met with the regulators. We engaged with our legislative team on some other advocacy efforts, as well as the coalition as a group.
Right. Like everything NAR does, the foundation is on the legislative side. We had 3 legislative anchors, almost like a shopping center. We have a Macy's and a Nordstrom. We had Senator Johnny Isakson, Senator Kay Hagan from North Carolina, and Senator Mary Landrieu from Louisiana as our congressional bases, because they were the ones that had the amendment in Dodd-Frank that created the qualified residential mortgage exception to the 5% risk retention.
Now, what are the next steps as far as, so they came out with this proposed rule, the comment deadline is the 30th, so in between that time and then what?
Right. The regulators gave us a 60-day comment period. Our activities will be, first of all, we just had a coalition meeting an hour before this session right now, where we were planning our activities, and our activities are this. We produced a white paper during the proposed rule that was very effective, that all 50 groups signed, and that was the basis of our comment letter to the regulators. We will be doing the same. We will use that white paper and have a Hill event with our congressional sponsors on the Hill to unleash the paper, so all of official Washington sees our arguments in the paper.
The other part of this was a question that was in the beginning part of the rule, which suggested that an alternative could be there, and that's a 30% down payment. What do we have to do to advocate that that is the wrong direction to go?
Well, first of all, we really don't have to do that much. The regulators basically issued the regulation to our point of view. That was the preferred proposal that was published. They did ask a side question, however, what if we added a 30% requirement to the qualified residential mortgage? So we will opine on that through our comments, et cetera, and our advocacy. And my sense is the way the regulation, I mean, let's put it this way. The proposed rule had a 20%, and the 20% proposed rule, they talked about a 10%, and now they upped the ante to a 30%. My sense is if they were going to put a percentage, that would have been in their preferred approach rather than the approach that we got. So, again, I just think we have to be diligent, we have to shore up the same support that we had, and file our comments with the regulators.